Yo, yo, yo. What's good, guys? Live chat. Oh man, AMC. AMC has now reached new all-time lows, and the majority of the video here today, I'm gonna spend covering AMC because I want to talk about the long-term outlook, and then I'll be going over crypto and some other things as well because there's a lot of potential there. But I want to focus on the AMC cycle for a little bit and cover that before getting into everything else. And if you're new to the channel, I know you guys are just coming in here, but we take a cycle analysis approach in the markets. If you want to know a little bit more about what that is, on the Discord, there is an info section channel that kind of covers those things, and then also talks about the indicators that we use here to leverage the decisions and opportunities that we get in the markets using this approach, right? Okay, so Matt, hello, Echo, Loretta, Ethan, what's up? Guys, say something in the chat, man. Like, say something in the chat. So, I mean, I know the majority of you coming in here, most of you chatted up and talk it up in there and ask questions because that's what I'm here for, dude. Here to answer your questions. Okay, so on the daily chart for AMC, we are using the spots indicator, and right now we have a pink spot. Unfortunately, that is normally a sign that the price is going to come down for a little bit, and that's fine. I'm gonna go over the cycle again and talk about why I think we're gonna see just stagnant price action now that we are reaching these levels. It sucks. It's unfortunate, but again, you got to look at the macro chart here to see what AMC is going to do after reaching these levels, because this inverse squeeze was strong, it was heavy, it was fast, and the price does not want to climb up just yet right now. So let's pull up the cycle. All right. And I pretty much just use these three indicators when analyzing the markets. I use spots. The other one I use is called levels, which is very good at telling us if the price is overbought or oversold. A very good way to also compare the structure of patterns on the historical chart, and then using reference patterns as well. So we use it for that. And then the last indicator I use is called changes, which is an ROC indicator. This one here is modified slightly to fit the cycle parameters that we use here. So taking, I'm going to keep going on the daily chart here, but right now we are coming back into the oversold territory again. So we did this back in September 2023. All right, a couple months ago, we did it. We came back out. We traded sideways. We're on the lower band. We have not crossed into the first level, right? This is called levels because there's 4 levels. Typically on the 4th level, once you cross that becomes overbought territory. And every time we reach that zone, the price comes back into the bands, right? Even if there's a wick. You get a quick wick, you come back in right here. We spent about 2 weeks outside, and then ever since July, again, a wick, we have not came back into that territory. So when the price comes back in and we don't cross the first level, because we did it back in 2020 as well, here we spent about 2 weeks outside. We came back in, and then very quickly we came in. And before we got to these levels, we were looking for a bounce. We're looking for a strong bounce um, because the price was mimicking, a lot what was happening back here in 2020. The entire market it wasn't just AMC, but AMC is behaving a little bit differently than the entire market right now. It's kind of doing its own thing. The market is up, and AMC is down, along with some other stocks, and even some cryptocurrencies are down as well, while the crypto markets are pumping. So it just checks out, man. The meme stocks, meme cryptos tend to do this kind of thing when the markets are either in a reaccumulation phase or redistribution phase. When it's redistribution, that is bad news, because then they're anticipating the markets coming down even further, quicker, and anticipating for a longer period of just stagnant price trading sideways. But if the markets are in reaccumulation, then these guys are getting ready to spring. And that's kind of what I want to cover here, because I think the markets are in a potentially what could be a reaccumulation phase that will last about 2 months. And I'm going to go over that first before I talk about, the rest of AMC here. I think it's very important to cover the markets here, guys. Do them both. Understand what we got going on. So the markets also, again, they're pumping while AMC is down here. It hasn't done anything. The markets are now heading into oversold territory. Okay, on the daily chart, we have a blue spot. On the weekly chart, we also have a fake out. We have a blue spot. This has only happened once, right over here. Okay, the fake out happened very quickly. And after that, we traded sideways for about 3 weeks before coming down. This is the reaccumulation phase I'm talking about here in the markets. Because we're so close to all-time highs, it's very likely that we are going to come up here at some point, and this is where you get into the reaccumulation phase in the markets, right? Reaccumulation phase can last months, can last half a year if it wants to. But right now, I think we're headed there. Now that we are extremely close to resistance at 460. So, and yesterday on the video I posted on YouTube, guys, which I am covering some other stocks that have potential. I covered Nikola, and I covered Paramount. If you guys want to check that video out, it talks about those two. And this kind of goes with that a little bit as well. All right. So markets are coming out of this fourth band. We're going to see probably a little bit of green highlighted up here. And also on the changes indicator, we seem to have some correlation with August of 2022. All right, so this little guy down here. Let's see, where is the path? I wish I could take a bars pattern of an indicator. That would be great. So this down here seems to have some correlation, at least time-wise, with August of 2022, going into August of 2022, which on the levels indicator and the spots indicator, we have a blue spot and we have a bit of green right up here, oversold, overbought, I mean. It trades up in this band for 6 trading days before coming back down. And then in this case, we did not reaccumulate. This was redistribution because we were coming down. But in this case, we haven't really decided what we're going to do because the markets are just trading in this zone here, which is right in between the highs and the lows of 2022. So it's right in the middle, really. We haven't decided if this is going to keep going up. But that's why we're doing analysis, right? We are trying to figure that out. And it seems to me that because the crypto markets are also anticipating this move to occur, you're going to see a lot of volatility in the crypto markets right now. It's very choppy. It looks like this. But the direction is pointing up. And normally with redistribution, you're going to see the same thing, but the direction is going to be pointing down. So it's like a pellet, a little bullet pointing down instead. So that's a good sign. That's step one into this whole thing. So, and the correlation, guys, between looking at what the markets are doing, because they're in a different cycle, and what AMC is doing is looking at more of the macro pictures. So AMC right now has a lot of correlation with 2020. We traded sideways, I believe, for since March going into almost a year. AMC traded sideways, just bouncing off of the support range back and forth. I think it did it 3 times. 2020. Let's see. Yeah, so right here, markets come down, they start coming back up, and then look at this, right? Markets are now bullish, which is the same thing that the markets are doing here. Now, this is a lot bigger, but we're taking a look at the drop here. So it's like if March happened all over again for AMC. The markets drop, trade sideways for a little bit, and while that's happening, while these smaller to mid-cap stocks are just trading sideways on this lower range, this is the accumulation before it starts climbing up, the markets are going up because the markets are not going to have that much volatility. If they're picking a direction, they typically go first, and then these guys, meme stocks, smaller cap stocks, tend to go last in the cycle. So if, say that we were somewhere in here, right? The markets come down a little bit, redistribution in the short term. They start pumping back up, cancel everything that is going out over here, and then the market, so we're, say sometime in September 20, which kind of checks out a little bit. If you look at the same time frame here. All right, we come back over here like that. This wouldn't call for upside. If we were looking at the exact same little phase here in time, we wouldn't see upside till July 2024. On the last stream, I already have a POI that I have tracking set for February on not this upcoming cycle in December, but the next one. And the reason for that is we have a couple of patterns that we're tracking that did the same thing. They did a redistribution with accumulation going into advancing, which we had a lot earlier happening here. But again, I think just based on everything the market is doing right now, I think that one checks out a little bit more. And then some of the other long-term patterns we were tracking have a lot of correlation with February. So it's very possible that instead of being, somewhere in September here, we're probably somewhere in December time. So almost like we're following the end of the year cycle in 2020 going into January, right? So this one is calling for a move at end of February, so about a month apart from the initial pump we had in 2021. All right. Now, if the markets redistribute just one last time, okay, I think it's going to happen quickly, and what I mean by that is, like, once we reach this overbought territory here, you're going to see some green, right? It's going to highlight, and then probably early December time, you're going to see the market start to come back down to do that one last fake out, right? Comes back into the channel maybe and does something like this. And then early next year, okay, early next year, we're going to have ourselves a nice little rising flag waiting for us. And I think this is going to be the perfect, it's going to be a disaster, right? Because, you're going to have this little flag, rising flag formation, which is typically bearish, develop. And then this is the fake out that happens here, which I can show you guys some examples. But if this is a rising flag, develops into a rising flag, we got February POI right here. AMC starts to pump like crazy to a range. And then the markets, you have one last squeeze, right? That one last squeeze happens very quickly. It reaches 500. The markets trade up here for a little bit, and then they get shut down very quickly and start coming back down. I think this is probably what's expected to happen in the next few, going into next year in May. I think just a lot of theta crushing right here in between this range for the longer term contracts. But it just checks out. It checks out for the other stock. So going back to AMC, pull up the cycle. Here we go. All right, so AMC is, what do we got? We got a week and a half left here in the cycle. All right, so we have until early December time. It starts coming into the next cycle. Do I think this one's going to be bullish? There's a possibility that it is, but it doesn't mean that we're going to experience volatility. Remember that in this small window that occurs every cycle, it just gives the opportunity for volatility to happen. It does not guarantee the volatility to happen. Right now, the correlation, I say this every single time, but the correlation is 6 for 5, which means that every single cycle that has happened inside that 13-day window 5 times. So with the volume, you can see it on the volume here. Volume indicator is probably going to smooth it out a little bit more, but all of these have happened inside that 13-day window. Okay. And the only one that happened outside, which happened in the after-hours session in 10 minutes, and they got completely shut down in the algorithm. Honestly, part of me doesn't even want to count this one because of how it got shut down. I think this one, if anything, the algorithm, and this is why sometimes we use the Fourier transform, is because it looks for stuff like this, and then it tells you if it's relevant or not. And this one here was an error in the cycle. So part of the reason why I think it happened in the after-hour session and not during, trading hours, because the algorithm goes crazy at that point. But going into it, the correlation is still very good. There's still that's still something I'm tracking. I haven't stopped tracking. And here is what we got going for in the next few months. Okay. So outside of the red zone here, which we got about 10 days left, it looks to me, and here are some of the patterns I'm tracking right now. We're still tracking ARPA because ARPA has been pretty good to us. ARPA has been the most accurate in spotting the POIs. I'll show you guys here. ARPA, this thing is crazy. Let's go on the daily. Pull this back down. For those that don't know what POIs are, they are points of interest. And points of interest are the little 13-day window that we track where we experience volatility, whether it's upside or downside, doesn't matter. It's just volatility that we're tracking. So it's really weird to me that after ARPA basically predicted that we were not going to have volatility after August of 2022. Because, and one of the things we talked about back here was that this pattern seemed like it was just going to give up right here. But this is a premium chart in crypto, so it's not ARPA's actual chart, it's a premium chart. So you can kind of see how the two are relevant to each other. We believe that the option chain is a tool these guys are using to leverage the amount of shorts that they have on AMC. I mean, options is a tool to do that. So it kind of makes sense to compare the premium volatility chart on crypto and a stock that's heavily manipulated using the option chain. Why the two look extremely similar. And it's not even that, it's not even just the structure, guys. We're looking at the same time, okay, in the way that these line up with every run up that AMC has had, okay? It gives up in August. It trades sideways up until November time here, which you can see we started to see AMC climb up in this range. Contracts were doing pretty good. It got shut down, and then what? Going into February, we see another little spike. This is not something that I would be using as much as I did back here. I think back here it was like pretty good to use this because the correlation was pretty high, right? But at this point, all it told us was that the volatility dried up on ARPA's chart, and that typically when the price just dies down, that typically means that the sequence or that phase in the cycle is over and it's done with. So that could also be the case. Why right now there is not that much correlation here, but we can still kind of see some of the spikes occur in the premium chart, and sometimes they are relevant to track. So the other stock that I'm tracking here, that one was a cryptocurrency. This is a stock. It's NVAX. And the reason I'm tracking this one is because it has shown to pump and dump consistently, like over and over again. So we know AMC is in a massive pump and dump. Okay, we have tracked this before with NVAX and then also some of the cryptocurrencies, right? So this pattern that you're looking at right here is right here. Okay. Take that away. All right. Try and zoom in here. Okay, so the reason I like this one is because normally when the price does something like this, if you look at the historical chart here of NVAX, right, it does it a lot quicker than AMC. AMC falls down. It takes its time. Really does. Like not even like Nikola, man. Nikola was just straight going down before it just popped. But AMC, it's got similarities, but it took its time up here. So it would trade sideways. It would trap a bunch of people, and it would do the same thing until it reached the levels, that it did now. And I think this chart is the same, but it just does things a lot quicker. But what I do like is the last two pumps it had, because there's a lot of correlation between the two there. Those are pretty similar. So it falls the same way. It's pretty quick. Okay, before it reaches new lows, it pumps a little bit, comes back down, and then it trades sideways for quite some time, right? I mean, this traded sideways for almost a year, May 2019, and then it starts climbing up in May 2020, so 1 year before the price starts climbing up. So I think AMC is probably somewhere in between in this phase, right, that we're tracking here. I don't think these are not one-to-one patterns. They're close, but they're not one-to-one. Okay. I believe this from the drop here, currently at 335 days a year, and then this from the drop to the drop right here, it's about 1.5, almost 2. So it's still relevant to track, guys. I mean, we the ARPA pattern is a fractal, and it's actually the most accurate pattern that I have on AMC. Why we haven't taken that one out, and it doesn't really matter. It's really about the structure here. I'm going to be going over some of these other stocks here in a little bit to tell you to explain how this works. But this entire period here that took about a year, if we take the math on that it is 1.5, about 1.5 to 1, okay, and that shows us that that at some point here in the future, AMC would start climbing up in February going into May of 2024. And this looks good to me because it's just a pump and dump, right? And pump and dumps typically come back to at least a mid range sometime in the future to hedge for those positions. So similar to what AMC had done in 2021. All right, they opened up the $40 contracts. AMC pumps to 70 and then trades sideways in the $40 range, right? We can't see that here because of the adjusted chart, but that's what AMC did. And I think it's the same thing that's going to happen here, except they would be hedging for leaps. So more on like the, yeah, there's just so much money in the option chain right now. Now, the only way I see things completely turning or like flipping to where AMC just would never bounce back is if AMC goes, bankrupt and movies just, movie theater industry just dies. Nobody goes to the movies anymore. Then you start to get into the whole, Bed Bath & Beyond 2.0, and that's where things get ugly because that happened with Bed Bath & Beyond, even though it didn't have the same backing, it didn't have the same strength, right, as AMC. A lot of backing of retail traders behind the stock, and you really can't compare the two. I think Bed Bath & Beyond is pretty clear that it was having trouble, but with AMC, we can't really say the same thing. And that's what sets the two apart is like if fundamentals are okay, then there's no reason why it should be trading in this range right now. It'd be a different story if the fundamentals were flipped and they were like Bed Bath & Beyond, right? So taking a look at all that, guys, that's important. You still have to track fundamentals at the end of the day. It's going to have some kind of importance once you look at everything else, when it comes to the cycle and these POIs. Okay. Now, I want to talk about the structure here of patterns a little bit because, again, this pattern is 1 to 5, 1.5 to 1, calling for upside sometime in April, early or mid-February going into April. And I want to talk about a stock here that we've been tracking on the Discord here a little bit. So Peloton is... And I covered Nikola as well yesterday, so we can go over both because I think Peloton is actually in a short-term accumulation phase that could potentially send this thing to advancing on the macro chart. Okay, this thing fell from $168 down to $3, similar to Carvana. All right, so there's one pattern I'm tracking right now. A lot of the market is doing this, guys. It's not just Peloton. There's a few other stocks that are doing this right now. This pattern I'm tracking on Nikola as well. It's GameStop. So these two, this is a fractal again. The timing is very similar, but it's not 1-to-1. Here, you can kind of separate these different sections here. Yeah, I'm going to be tracking this from the initial drop. So the initial drop, that's the start point in this sequence that the algorithm is repeating, right? Because the algorithm likes to repeat these little sequences over and over again. And it takes about 120 days. Look at that, 120 days for this cycle to do its thing. It's the same thing that happened with AMC in 2021. From August of 2022, March of 2022 to August of 2022, 120 days. This cycle, man, is pretty real when it comes to the option chain. So kind of going back to the first thing we covered with AMC, because we used the same pattern. We used the January of 2021 pattern. I'm going to pull it down here. Show you guys here how relevant this is, okay? 120 days from the pump to the pump, right? Just because it dropped does not mean that this is going to drop on the 120-day mark. But It is a little cycle right there, 120 days. What happened back here in March of 2022 that we had covered with the same thing using the volume analysis here? It took about 120 days from the price to dump to pump again. And then going into August, same thing. It dumped and then it pumped on the 120-day mark. So if we use this to understand some of these other stocks in the market that have the same potential, about 120 days, it kind of checks out, right? Because GME right here is showing that the price would come up in the short term and essentially could have a kind of a squeeze effect going into and the end of the year. This is another stock that we're tracking on the Discord right now that has that kind of squeeze potential, apart from the other two that we covered on yesterday's video. So I want to split this up into little sections because I have a video on AMC that does the same thing. It redistributes this volume down here. And it's like these little pieces that you're looking at here, right? This is just a pennant. But you can redistribute this volume however you want as a market maker, okay, who implemented this algorithm. And you can redistribute it however you want depending on where you are in the cycle. So we had that, and we applied it to the same little section over here in 2021 going into March 2022. And it was like a match, dude. It was a match in how they redistribute the volume and how these sections were matching up. And that was one way we were able to predict this run-up as well as the run-up in August. Okay, so here I already did that. Here are the patterns. Okay, and I didn't take the entire GameStop pattern here, so you don't see anything else that's happening over here, but it was in a redistribution phase, right? So GameStop was going down when this happened, which is something we can see here on Peloton. So this right here would be over here, right? That's where it all starts. Okay, and then this little section right here just goes the exact same place that it's currently trading at. It looks to be a failed reaccumulation phase. Instead of going up here, it just creates an inverse cup, right, before it starts coming back up. And then one would say that this is the spring, right here in November. And guys, go take a look on, because I do love this stuff, right? But go take a look at a reaccumulation pattern, and it looks exactly like this. It's a reaccumulation pattern. This one we have overlaid right on top, and this is what I'm talking about when it comes to these little sections that we see happen on the sequence we're tracking, 120 days. Where is this currently playing out? Because did not play out right here. We take a look at this. It's currently playing out right here. Okay, so that is where you spot it. Now, does it have to come back down? No, it doesn't, because the algorithm has already taken that into account somewhere else in the sequence. This is why timing is actually more important than structure. Timing of the drops and the timing of the pumps here are going to be more relevant to track than the actual structure of the chart. Okay, so this one I think is going to pump very soon here with the markets. Even if the markets start to come down sometime in December, this is going to be one of the stocks that should be beating the markets a little bit, just considering that it is essentially doing this sequence, right? That it's doing the GameStop sequence, man, over and over again, all over again. All right, so we have the same thing, guys, with Nikola. Nikola looks a little bit more like Carvana, but here is GME's as well. right there. Okay. GME, this is a lot bigger. So, yeah, some of these are going to do the same thing. It's just going to be more on different time frames. Okay. I think Nikola is doing the same exact thing. So going back to AMC, man, AMC is down 8%. And I'm going to get to some of the questions here right after this, guys. But I just want to say one more thing here on AMC because we have the POI in February. So there still is quite a bit of time before I think we see anything crazy happening here. One of the things that we overlaid right now on the cycle, and this is just one way to understand, if the cycle is real or not, right? So the cycle, guys, and we do use the arc that happened in 2021. So I'm going to take this cycle here. I'm going to take it from the peak, and I'm going to take it all the way to March, all right? So we have 1, 2, 3, 4, 5. We have 5 cycles here. And what I'm going to do, and the reason why you're seeing these overlaid is because the chart here, depending on the time frame that you're in, the cycle always does this. TradingView adjusts it based on that time frame. So it's overlaid here, but if I go to the 4-hour, it should fix it, which it did. Very weird. Okay, so taking it from the peak, like that. Okay, so here again, here is the cycle. Over here, you can see it's the same length. But for some reason, after this whole thing went down, it's no longer like the exact same size, but it doesn't matter as long as it's 62 days long. Look at this. Over here, slightly bigger. And then over here as well, 63. It's super weird. I'm not sure. I'm pretty sure it's the exchange that's feeding this information here. But some of these are bigger, even though they shouldn't be. Like they should be exactly 62 days long. This one is a little bit shorter. Yep, 62, 57. Nope, 63. So between 62 and 65 is gonna be it. Anyways, coming down to it, guys, we flip this, and this is what I think the AMC is doing right now. So I'm taking it from the peak of the cycle to where it's currently at, right? And we were at 5, so I do have to stretch it just a little bit because of what I just talked about here. But here's the peak, and then we have to go to 5 right over here. Right there, 1, 2, 3, 4, 5. Okay, I can take the cycle away, and now we can take a look at AMC right here. When you, most of you are, I'm not sure if you've been in on the channel, but one of the things that we did in 2021, we took a look at the pennant here that AMC created, and one way we kind of cracked the cycle, we had a different cycle we were tracking on the 3-month, and then we had one on the 4-month, which all followed the 62-day cycle, but certain sections were, the price went down, came back up, were just mirrored versions of what the algorithm was doing in the future. It's like it was hedging for that. Anything that these guys pump essentially in the future will be inverse to use that volume, that pump volume as leverage to short the price in the future. So here is the algorithm, and look at the structure, right? Okay, right at the cycle, we have an inverse arc formation, which we called for. We had a POI here. The price went down. It followed the same sequence. And then what happened here? It failed again, which is the same thing that AMC did inverse in 2020. It was just a pennant. It was a pennant that traded sideways. Now, the price here did remain bearish, right? We're flipping the chart. It did remain bearish and eventually ended up like never coming back to those ranges. So I think AMC here is still following the same structure. Eventually, it's going to turn around and start climbing back up. I think we're close. But this is why, guys, I don't see AMC going back and pumping until February. Because if you take a look at this, it seems like we're currently right here, and the spring is close. But even then, if it comes up, you know, if it springs here and it comes up and it does something like this, it's going to come back down, trade sideways until February, and then potentially here is where an opportunity comes in. And I'm more referring to, you know, whether you're somebody who trades options or shares. I think with shares, I think going down to that $5.50, $6 range is probably a fair range in my opinion. Okay. A lot of stocks right now that have a similar market cap. For example, Nikola. We think Nikola is going to come back up. What did Nikola do? It went down to 50 cents. All right. Now, I know the market cap is structured a little bit different with the amount of shares outstanding. But if we take a look at AMC, divided by 10, that's like if AMC went down to 50 cents. If you remember, right, AMC was trading at $70 and in 2021. So post-split, say it never happened, divided by 10, it'd be around that range. Now, we did add some shares. We did dilute a little bit. Ape coming back into the equation. That did, you know, mess the chart a little bit. So this is just a rough estimate. But, you know, I think it's a close one. So think about it that way. AMC goes to 50 cents and then it starts finally turning around from there. So that's what we got, man. That's what we got for Amy right now. I think it's slow and steady. Slow and steady. We're going to keep updating AMC. I think things are going to turn around. I'm confident in the fundamentals, and I think there's no reason why it should go down to a penny like Bed Bath & Beyond did. But if it ever gets to that point, you know, I will share my thoughts on that. But this is just the ugly truth of the market, guys. It's just the way the market works. Sometimes it does this, and then, you know, the price ends up turning around. It starts to go very quickly. You know, every time, guys, every single time when it's ready, boom, no chance. $10 to 110 in 2 weeks. So I think right now it's just waiting for each volatility zone. That's what I'm doing. I'm waiting for each. I'm going to track the next volatility zone. I'm going to track the one in February, and then I'll track the one again in May. But anything in between, I'm gonna treat it like I have been, unless there's some other thing going on outside of the cycle. But for now, I think tracking the POIs is key for Amy. Right? Okay, let me get to the questions. And for inverse squeeze, man, what I mean by that is when we come up to these volatility zones, right? These little 13-day window. An inverse squeeze only happened once on AMC. It happened right here. And the reason why I know this happened is because we're currently following the inverse pattern on AMC, the same structure. The algorithm is just flipped the price. So what happened before this arc here? Right? The price had an inverse squeeze. So it literally went from 72 all the way down to 6, which is not a negative 90% return. It's almost a 1,000% return, which AMC only did once, and it did it in January of 2021. It did it. And in June, it didn't go up 1,000%. It went up only I think 700. So that's more what I'm referring to is like we come up to these zones and we have the ability to track these little zones that occur every 62 days, but it doesn't guarantee that the price is going to have volatility every 62 days. We just track that little zone. All right, so a lot of this I did go over here. NVIDIA, yeah, so I can definitely cover NVIDIA. Yeah. So and you know, with these kinds of plays, guys, like the only thing about NVIDIA right now is I think coming up to it, there's been a lot of patterns I've tracked before that were calling for downside using the pattern scanner and everything. The only thing is like once the price pumps up to this range into earnings, it almost makes it seem like these guys like they have I mean, you're at resistance right now. The price can very much come down to, you know, extreme levels if it wants to, but because you are at resistance, it just makes it that more uh, dangerous, right? Like it's almost too predictable, right? You're like, oh, we're trading at resistance, you know, the price is going to come down because it's at resistance. It can, but it also can very well keep going and keep bumping. This one is dangerous. I wouldn't play personally. I wouldn't play Nvidia right now. I think this one is. I mean, volatility right now is through the roof. After this massive pump here, if the markets are still expected to keep going up, I mean, just imagine, right? Nvidia is a big player. It's a big holder in the S&P. So if we're expecting the markets to keep climbing up and cross the where is it here the levels indicator, then yeah, man, if we're expecting the markets to cross the levels indicator, that means that these guys are going to have to do it as well. But even if it did pump up, I mean, volatility would probably crush these contracts because there would be some kind of fake out. I mean, this thing is just does not want to go down. I mean, it keeps trading sideways on this range like it wants to reach 600 or 550 before taking a breather. But I think there's going to be an opportunity probably after earnings, after these guys have done the damage to the contracts. I think there's going to be an opportunity for Nvidia. Uh, Steve. So if Amy does crash, like if it goes bankrupt or anything, I think that would be the only narrative I could see for it coming down. If the markets do crash, I mean that would be the only way to do it. But I don't think the markets are going to crash anytime soon. I think there's still quite a bit to go. I mean, if you look at the weekly chart here, so we're currently at resistance, right, on the weekly chart. Like we're just writing resistance, and we really haven't seen the chart do something like this in a little while. Here is spots on the weekly chart. We have one little fake out right here, right? So it comes back in to the indicator here. We've only had this happen one time. We also have it on the daily chart where it comes back in, it fakes out, and then typically this is there's two reaccumulation phases here, right? We have one here, comes back up, and then essentially we're looking for something like this here. So we might come back in one last time the same way and turn around, but I just don't see the markets coming down here. The structure here is, it looks, it's more on the bullish side than it is the bearish. I mean, we're not even trading sideways here. This is a rising flag developing right now. And rising flags, even though they're bearish, they do pop one last time, and that's the fake out that happens before the come down. So if this pops, it's a rising flag and it pops, it's very likely going to cross 475 and create a new level of resistance somewhere in the 500 range. Which, yeah, I mean, there's a bunch of, you know, stop losses up there for big players. So say the price comes up, stops those guys out, keeps going a little bit, becomes a psychological level, and then the price starts coming down. Comes down probably quickly, more than anything here. I don't see SPY coming down here. Let's see, changes. Okay, here is another way to track this too, but changes. Yeah, we haven't reached resistance yet. We're getting very close. Okay, this is very good at respecting resistance on basically any time frame. Come back here, how powerful the weekly time frame is here, but look at this right here, right? For an entire almost 2 years, using this indicator, every time it reached resistance here, the price would come down the following week. So taking this as an example, we also have it happening over here. You find yourself in a parallel channel, and every time it reaches that range, the price comes down, so this is pretty good. This is pretty good at following that on larger time frames. And it has not crossed yet to that point. So it has not crossed. Yeah, and Lynn, so to that point of we just have a difference of opinion there, but I will comment on that in that I'm not, I'm saying that if something were to happen where the odds point to extreme downside, say it comes back into the penny range or something. If AMC goes below $1 without having some kind of reverse split, or if there's more dilution at that point, that's not a good sign, right? Anything that goes into it, and I'm talking from a psychological perspective in the way that people look at the market. A lot of companies don't do reverse splits before going into that range. So AMC had done it before, right? It did it up here, and people were confused why that happened, but it never reached the ranges that we're trading at now, which is around the 50-cent range. And that was a weird move, I think. It was a very weird move, but it didn't do it. A lot of these companies like Bed Bath & Beyond, Xella, these guys had done reverse splits. Mullen, they did reverse splits when the price fell into the dollar range. So if the narrative is, whatever the narrative is for that move, I think it's gonna come down to fundamentals at the end of the day. But again, I don't think we can really compare the two. We can't compare, Bed Bath & Beyond and Mullen, Xella with AMC's fundamentals. I think they're pretty different. So, with these stocks that are trading in this lower range, I think it's because we're anticipating some kind of bigger move in the future that will maybe change the game a little bit, right, for the better. If that is the narrative, if things change a little bit, then it's possible that the price at least comes down to a mid-level. And then from there, we take a look at the chart again. But, I mean, that's still an opportunity, right? Because the price, say it's trading at $5 and it goes all the way back up to this first little phase here at 50. That's 10x, right? Say it comes back to 100, which is the next phase. That's 100, and then the next level of resistance would be 200. That's still a lot, from where AMC was before, and it's happened in the market before. It can happen again, right? But you do have to look at all these things before making that call. All these other things. So taking a look at that, I know that Adam had mentioned the dilution and stuff, but it's all that it will affect AMC in the end, yes, and I think a lot of people were already anticipating that to happen. it does make the price a little bit harder to move, but it doesn't, you know, from where AMC came out of right now, it was bearish. It was bearish for quite some time. So automatically it puts a lot of pressure on longs, and it makes it harder for the price to come up. But once you start to see signs that the price is getting ready to turn around, then dilution plays a small role in this, because a lot of the money that is coming in here is, you know, big money, large institutions coming in and pumping the stock. So, you know, again, it all depends on the narrative. That's, I think, ultimately what's going to make the price move, and then retail on top of it. Once it gets pumped, it gets brought up to the media again. That just puts even more and more and more pressure on the stock to move up. All right. Why would a company making money in the real world rank up if the stock? Go bankrupt if the stock crashes. I was replying to somebody. So Stevie had said, "How would AMC perform if SPY crashes?" Only if SPY crashes. I think not everything is doomed, right? If SPY crashes, but a lot. You know what happened back in 2020. We had that mini correction in the market, and AMC just traded sideways in that range while that happened, but it did also crash with the markets. For the catalyst being, right, COVID, so that automatically affects the you know, the theater industry. But in this case, I personally don't see the market crashing, so I don't see why the movie theater industry would, you know, would start crashing for any reason right now. So I am I am not for that, if that makes sense. I don't think that's going to happen. More of a hypothetical thing. Yes, Echo. Yes, we are doing crypto as well. Some announcements coming up here soon. Go over crypto. Now, with crypto, guys, something else to consider right now is that if you were on the last stream here, we talked about 3 different cryptocurrencies that were getting ready to turn around, right? And for the better, right? Like for upside. Now, one of the things I covered on SNX, this is the craziest thing, right? You guys were here on Friday. We talked about SNX, and I still have the POI list here set. I'm going to go over this here because it's pretty crazy, pretty cool stuff. We had SNX. We had SNX, IMX, and MDT going up in the weekend, right? And this is when they were trading at low levels. Okay, price starts climbing up like crazy on SNX and IMX, right? This thing goes up 34% in a matter of one day. All right, one day. It goes from 2.78 all the way up to 3.75. SNX had a POI. IMX had a POI. You guys remember points of interest work the same way in the markets. Okay, when tracking patterns and also tracking these indicators that we use. Now for crypto, we also use levels, but we use a few other ones that are very good. Like Volt tracks volatility, is a good way that you can spot reversals very quickly. That one's one of the better ones to track. IMX did the same thing. It goes up about 30%, and same with MDT. MDT went up quite a bit. So these two, and all of these cryptocurrencies that we're tracking right now have a lot of potential, right? MDT, you can see, got shut down very quickly, but it still went up to the ranges, right? It didn't go up the same way. It went up 20%, and then it got shut down. These guys were the winners, right, for the weekend, and now we have a new set of cryptocurrencies coming back up, right? Once these go up and you have tracked and found these POIs, they don't keep going up forever, right? They're going to take a breather because that's what the crypto markets do, right? Crypto markets trade 24/7, and this is the best way to explain it in the crypto markets, because these guys don't have an option chain, okay? Time is not a factor, all right, at least for the majority of cryptocurrencies, unless you're in some kind of platform that trades options with Bitcoin or Ethereum. But that's not what we're talking about here. We're talking about leverage trading, and you can clearly see here how things swing, all right? We knew that the price was going to come down here after it reached 3.70, that it was going to start coming back down and retest this trajectory line, which is bullish, right? It hasn't changed. This is still bullish. Yeah, the crypto markets can keep pumping here, or it's even possible that they turn around and retest at 295 again. And see, you come back to square one a little bit. But crypto markets don't care, man. These guys are going to be liquidating you on the way up. Nothing in the crypto markets is stable enough. And I'm saying even Bitcoin and Ethereum, like, these guys are not stable. I mean, they offer a higher leverage options on purpose for Bitcoin and Ethereum because of that reason. They don't have that much volatility, but they know that retail tends to pick the higher leverage positions. And on top of that, more importantly, the isolated option, which is terrible, right? Cross margin at least gives you the cushion to work with very small amounts of capital and still have a cushion to protect you from the volatility that is occurring in the crypto market. So, yeah, same thing here. I think all of these are going to keep pumping, but it's like you're trying to catch the bottom here. That's the difference between the market and crypto, is you're trying to catch the bottom to ride right to the top, get some new level of resistance, try and figure out the structure of the pattern, and keep riding the wave, right? This is just in, out, in, out, in, out, until you reach a point where this thing is just going to squeeze and explode. So, yeah, all of these have potential. I MDT being one of them as well. I think these are going to turn around very soon. And we do have some news coming up here shortly, so that can maybe affect things in the short term. But I would treat it the same way as I would, the Fed minutes coming out and stuff, because FOMC. Because what happens there typically is, well, they have a time where they're gonna say something. People are anticipating that, similar to earnings, and usually there's some kind of fake out that happens before that. So those are always things I wouldn't play in the crypto markets, because their specific goal here is to liquidate anybody in on a position, right? XRP, prime example of this. Last week, we had this massive catalyst come out, right? And it was a fake one. So these guys still took the opportunity. These big players still took the opportunity to pump the price following this fake news, and then they dumped it right away. So yeah, this is the thing. This is the thing about crypto. It's an opportunity, but it's also a high risk thing, right? Because the crypto markets just do this every single day. Like every single day, there's one stock doing this, or one crypto, or two or three that do that, and yeah, it just makes things a little bit difficult, right? So for me, guys, it's just follow the trajectory, right? And in this case, it's pretty clear that the crypto markets are trying to turn around. Like, this thing has just been riding up, okay? And it has not fallen below any levels. This is creating higher lows every single time. This is XRP. You can see it on Bitcoin. You can see it on Ethereum. These guys are all bouncing off of and creating new higher lows, which is very bullish. But in the short term, I can't really say much about that because things can come down very quickly and they can start springing back up again if they want to. All right. So we're going to leave it there for today's stream, guys. If you want more updates and stuff like that, you know, we just real quick, I did cover this last week, but one of the plays that we had on the Discord that was crazy, and I posted this on Twitter, X here, but I just want to show you guys real quick how this worked. Okay, so we have, these are all the indicators that I have you can use. All right, and here is, okay, for the market, we use 60. For the crypto markets, we use 50. All right, so this is why I had this trade set up and played out according to plan, right? We have two things that happened on this trade, and I can show you guys here. So here's the entry alert on, and it starts with an option idea, and this one was based on this indicator, right? The correlation on end phase was that once it reached and got outside the oversold territory, it would come back in about 3 days. That was the average here. Okay, back in 2021, it took 3 days. Then it took 4, 6, 3, 3, and then here, okay, it took just 2 days to reach the first band. And right now, it hasn't stopped, right? But the plan, the trade plan, was that it would reach the 25-cent range, which it did. And then from there, the exit strategy was that it would come up to the $3 range if it reached the first band, which it also did. So here's also the exit alert. You can see right there was a 1,000% return from 25 cents to 3 in a matter of 2 days. And that was all using this indicator here, this levels indicator, as well as understanding the structure of patterns, right? So we use that to set up this alert here, and there's many of plays that I have set up right now that have similar potential using the same indicator and some other indicators as well. So if you guys want to check that out, click the link below, and it'll take you straight there. You get a little bit more info. You guys also get all these indicators there for that. So I offer right now about 6, and there's a few other ones coming out. I have a crypto calculator that's coming out. It's pretty cool. And an option calculator. This thing is freaking awesome, okay? Input and project and see what options would look like. Okay, here are the input parameters. They're all going to be different. The only thing you have to put in here is the implied volatility. That is the only thing that TradingView does not offer. So you do have to put that in yourself, but that is, you know, any broker has that. You can use this as just a calculator, right, based on that. All right, guys, so we'll leave it there today, and I hope to be live at some point here during the week, kind of cover some other things. So if you guys enjoyed the video, make sure you subscribe and also like it. And if you have any questions, message me on X, on Discord, anywhere, and I will reach back with some answers, all right? All right, guys, take care. We'll see you on the next stream. Bye-bye.